So let me see what is going on here. Index check failed. Previous closes, this index check failed. Long rejected since it is 0.5%. So this particular configuration seems like it will only invest if it is uh, over 0.5%. So all the investments are rejected here. The reason why I'm trying to show you is because of this, that the index is not at zero point 0.5. Unless it goes to 0.5%, it will not invest. So here, uh, what I'm trying to say is that whatever you configure, whether you want to see a market with a certain threshold or anything, it's going to follow every minute for you. So that's exactly why I wanted to show you this email as to what is happening as on now, at which is 10:59, just a minute back, as to what is the market condition and why is it rejecting. But I think this account does not have anything to do with shorts, so there will be probably no shorting stuff happening here. So that's one thing. The second thing which I'm talking about is portfolio amount. Now, if your portfolio amount is greater than 125, then you get unlimited trading. But if your portfolio amount is less than 125, then the algorithm will trade in unlimited trading. Then you get the benefit of 60 seconds, right? As soon as the cash settles, you are immediately looking into the next opportunity and looking for the next settlement, maybe within few minutes or hours as to what you have seen. But if you don't have a portfolio margin account, then unlimited trading will be restricted by the custodian, which is Interactive Broker. In that case, you might have to wait for 3 days for your cash to get available. Means you would be trading probably like 20 divided by 3, maybe like 6 days in a month or so, something like that. Again, market and symbol conditions has to be satisfied then to qualify the new investment. So of course, there is a downside of not having a portfolio margin account, because you'll not be able to trade that many, because the broker is going to restrict you. But if you have a portfolio margin account, you would be able to trade unlimited. But having said that, even if you are saying that, okay, my fund is say 125, you open a portfolio margin account and you're telling him that, okay, I don't want to use leverage, means your available fund is 125. Now, when you're saying your leverage is 1, means you're using your own cash. When you're saying it's 2, you're using 25% of the cash. When you're saying 3, it is 50% of the cash. That's where how Interactive Broker works. But on your fund side, you can, if you decide that, okay, you want to do only one fold, then it is basically 0, 1. But if you're wanting to say that, okay, I want to use 50% of my leverage, then in that case, you better put it at 3. So this is what it is happening. I think there is a calculation error. It should have been times with 3. And this is not the sum. It's a wrong calculation. So it should be around 4 times of that. So, sorry, let me fix this. It'll be this times this. So now you have 375,000. So basically you have 125 your own money. You're using 3 times of leverage, means you're looking at around 375. That's your fund. You can also say that, no, I don't want to use leverage. In that case, you basically remain at 1. So it's 125. So this is how you define the fund. But that doesn't mean you're investing on that. Then comes the cash management. So cash management is how much of a percentage of the fund you are going to utilize is what the cash management is. And that's what you're looking here, the available cash, total buying power and the available buying power and the cash balance. So this is the column which you are looking at to compute your cash availability. So your cash availability is say 100, fund availability is 125. You can say, oh no, you know what, I want to only use 50% of my cash. So you are using 62,000. Say if you are a very conservative person and you are saying that, okay, I have invested 125, I mean my fund is a 125, but I want to test the water and I will not go more than 15,000, then you can reduce this percentage to say 12 and see what happens. Yeah, so 12% will give you 15,000. So this is the way, this is the money you will be investing in stock market. The rest of it is your ideal cash. The good thing about Interactive Broker is your ideal cash. I think Interactive Broker will provide you around 1.68% APR for your idle cash. But this is not what I'm trying to get to. What I'm saying is your funds, which is available to you, could be with leverage, but the cash is again controlled by you, how much you're willing to invest. So sometimes you can say that, okay, I will go by the percentage utilization, which you have just seen here, that you can say that, okay, I will use 100%. So it means in one shot, same day, you are investing 125. But you can also say that I will go 50%. That means you are investing 62,500 in 2 days. You are utilizing 100%, but you are spreading it in 2 days. If you want to say 25%, then you are spreading it in 4 days. So that's another thing which you can do. The another very important feature, many people don't, but you can also say that, okay, if the market is going higher, which is SPY, which you have defined, is in a bull condition, then I will probably have an incremental cash of say 10%. So you can specify that percentage, and you can say that if the market is bull, I can go based on increments. So this is what you do here. So if you go to fund manager and you say DU464, so you can say this is the real time, and you are comparing it with real time. Here the buying power utilization is 40%, but you can say different types of scenarios. I can have it by based on an increment as to what I just explained, or if the market is increasing, then I want to go by an incremental percentage with an index tolerance. So you can say that if the market is 5% increment, sorry, 5 never happens, say 0.5% incremental day over from one day to the next day to the next day, at that point I can use 25% of my cash if I have to. So it gives you a lot more flexibility to utilize your cash, whether you want to do it in one shot or you want to do it over a period of time, all sorts of stuff. So let me see what is happening here, because as I'm talking, real trading is also going on. So it's like, it seems like at 10:17 it, sorry, I have to go up or down. Hold on. I'm trying to, this is a little slow. I'm seeing serious connection problem from Amazon today, but it comes back. If you cancel out and you lose connection, so you have to go back again. So I'm going back to the connection. So it seems like if I go based on the timing, uh, when I do it reverse at 10:51, now it is 11:08. At 10:58 it sold. So last 3 minutes it didn't sell anything. And sorry, last 10 minutes, neither it purchased anything. So it seems like it's within that tolerance level for which the algorithm is blocking him from the market conditions. So this goes to the minutest details ever possible. So which humans cannot possibly do. And that's why I'm trying to put so much of stress to explain my viewers that it is so much to a precision level that humans cannot calculate those type of precisions. So at this point, 11:58 or 11:57, if we look at the market, something must have happened for which it is rejecting it. You see that? It's a red here. So that means the candle is not in the favorable direction. As a result, these stocks are getting rejected. So there is these type of things humans cannot do. So anyway, let's continue. So now, having said that, this is the way you can manage your cash, and then you have the risk tolerance, which means that you can set a tolerance of 2%. It could be on a net worth or original amount. That means what? If you have 125,000 as your net worth or original amount, you can tell the algorithm that if the investment is below 2%, means $2,500 below the portfolio size, stop all the investments. So it will not invest and it will keep rejecting till your unrealized profit again goes over 2%. So you can set it at 2%, 20%, 30%, all depends on you as to how much you would like to put in as a tolerance. So of course there is a theory, right? More gains, more risk, more gains. So if you want to put the tolerance to 1%, of course your gains will be much lesser than um, uh, as compared to somebody who is putting a tolerance of 5%, or someone as compared to someone who is willing to put tolerance of 10%, because it will keep investing more. It will keep looking into that long list and look into that opportunity. It will let you qualify the tolerance level and move on. Then the most important, another important thing is the stop loss, and stop loss is completely up to you. You can have your own stop loss based on whatever strategy you want to run. Uh, Say for example, here, if I'm going in as a fund manager, you can have your own stop losses as you have seen here, and that will completely depend on your strategy. Like if you are going, if your research says that okay, for long you should put it at 7, for short you put it at 11, it's up to you. If you are an intraday trader, you might put it at zero point 0.5 here and zero point 0.5 here, so that you basically square off one leg loss to one gain. But again, in your list, if you have say 100 stocks and you are making losses on 20, so you will need another 20 to wipe it out. So 40 is gone, then you will be left with 60 to make profit for that day. So it all depends on how you strategize moving forward. So having said that, I think there is a lot I have covered here, and I will continue the rest of it. But at this point of time, I think I'm given a very clear picture of what is expected in a quant trading, where basically human efforts are not there. You don't need a human being anymore. So you can manage one account or two account or 500 account. You don't need any humans. So this guy who is working for you is a fund manager who is dedicated to you every 60 seconds. So I will pause for a while before I come down to the next topic. But let me see if I can